Oh, I want to go over the recent episodic pivot trades I took. And it was a total of 3 trades here on Path, AAL, and AMSC. So let's start here with Path. And yeah, it was from last year. Very nice volume day here on December 1st. And yeah, I entered here on December 4, average of 24.50. So I missed the dip by here. It went almost here to the low. But yeah, as you can see, it as the new year approached here, it had panic and yeah, did break down here. And yeah, I did end up to stop out here January 11. Way too late, because as you can see here, the moving averages, it already broke here. So this day would have been the perfect stop here, because as Kristjan Qullamaggie is always telling, if it's breaking down here below the 10 or 20-day moving average, it's a stop. But yeah, I had hopes it can come back, but it obviously didn't. And even though the earnings report here was very good and the volume, the price didn't react, and yeah, it did get stopped out here. And that was one trade. Very frustrating, but that is trading. So let's see here the next 2 trades. On AMSC, not a very good history here on the daily chart of EPs. And I was trading here in January 25th. Had nice earnings here, 5 million revenue beat. But again, this was a stop basically for a loss. So here was the range where I entered, $13.30 average. And yeah, not long after that, I got stopped out here on the low of the day. And yeah, they did an offering the next few days, as you can see here. So would have been either way a stop. So yeah, that can also happen on these stocks. Even if they have earnings, they obviously want to capitalize on it. And yeah, offering happens and price tanks. Also, volume was not too bad. But yeah, the price didn't react as good as expected. The last one here, also a loss on American Airlines. Also earnings at 20-cent beat, estimate beat. And yeah, this was also not a very good setup here. Volume not exponentially high like on these days in the past, but it was a little gapper. So I entered here. Let's take a look, 50-minute. On the 50-minute, it looks very clear here, the entry on the high, first candle, the high. And yeah, I had an entry here at 15.20 or something. And yeah, the next few days, it also did stop out here, 31st, I think, here, yeah. So also a loss and a cut, which means what is also a very nice lesson here, I think. So I was basically risking on every trade $5. I lost, yeah, $2.50, $3. So a total of minus 1.2 R. So basically the risk to reward, I'm down 1.2 in total. So that means that in the next few trades, the winner has to be basically double to be profitable. And one example of this would be something like this, DRCT, which I didn't trade, but this is a nice example here. So this line would have been a nice entry point. And if we take a look here at the stop, the risk would be 80 cents. And we take a look here at the point where we have to stop out. It's basically 7 times bigger than the risk. So even though losing 3 trades here, one good trade like this one can catch them all up and still be profitable, even though it's a negative win ratio, because losing 3 trades and only winning 1, but the 1 trade that is winning is 7 times bigger than the losing ones, the risk to reward here. So that is the power. And what Kristjan Qullamaggie always talking about, if you can catch one of these and stick to the rules here, stopping out when it's crossing down the 10 moving average or 20, you can have a positive trading revenue, even though the winning ratio is a negative, or less than 50%. So that is a nice lesson, I think. Leave a comment and thanks for watching.